Hey everyone, welcome back to the trading floor. Today we're diving into the basics of support and resistance. Let's get started. Support and resistance are foundational concepts in technical analysis. Support refers to a price level where a downtrend can be expected to pause and react due to a concentration of historical buying interest. Conversely, resistance is a price level where an uptrend can be expected to pause and react due to a concentration of historical selling interest. Essentially, support acts as a floor that prevents prices from falling lower, while resistance acts as a ceiling that prevents prices from rising higher. Finding support and resistance levels can only be done using historical price action. Here are some methods. First up is horizontal lines and boxes. Look for levels where price has repeatedly reversed in the past. Good support and resistance levels have multiple touches. Keep an eye out for support that has turned into resistance or resistance that has turned into support. These levels in particular tend to cause reactions. The levels can be drawn using horizontal lines or boxes if you prefer to view these areas as zones. However you decide to draw it on your chart, remember to try and capture as many touches as possible. The second method involves using moving averages as dynamic support and resistance levels. Moving averages are one of the most commonly used price action indicators, and the sheer number of people trading with them causes it to become a confluence. Some of the most popular moving averages to use as dynamic support and resistance are the 20, the 50, and the 100 period moving averages. Last up, round numbers like 50 or 100 often act as psychological support and resistance. You'll also hear these levels referred to as bank levels because historically banks will use round numbers to nest their biggest orders. The method here involves drawing a support or resistance line that covers a lot of touches and then dragging that line to the nearest round number. There's several ways to use support and resistance levels in day trading, and one common approach is to look for reversal signals. When price approaches or touches a support level, look for signs that it will bounce upward. These signs could be the development of bullish market structure or price action reversal patterns such as an inverted head and shoulders. Conversely, when price approaches a resistance level, look for signs that it'll reverse downward like the formation of bearish market structure. Another approach is to trade breakouts. If price breaks through a support or resistance level with high volume, it often leads to a strong move in the direction of the breakout. While trading a breakout itself can often be risky, trading the retest of a breakout is what we're talking about before when resistance turns into support or vice versa. Let's go over how you could implement support and resistance levels into a basic trading strategy. Start by marking significant support and resistance levels on your chart. How you choose your levels is less important than you sticking to that method every time. Consistency is key here. If you mark out your line or box because of the most touches, go with that and stick to it. If you mark out touches then drag the line to the closest bank level, that's fine too. Just stick to it. The next step is observing price's behavior as it approaches the level. When price comes near a support level, look for signs of a momentum shift such as the bearish candles getting smaller. Conversely, when price approaches a resistance level, look for signs of momentum shift before considering going short. Next, once price reacts to the support or resistance level, use price action to confirm your entry. I can't emphasize this enough. You have to confirm your entries. For example, if price was already bullish and this was a pullback to support, look for bullish engulfing candles exiting the support area and take an entry at the close of the engulfing candle. Conversely, if this wasn't a pullback and price was actually bearish before finding support, wait for bullish market structure to form before considering going long. Next is setting your targets and stops. Place your stop loss just below the support level for long trades and just above the resistance level for short trades. Taking profits can be as simple as targeting 2 times your risk or looking for the next support or resistance level. Always manage your risk and use stop loss orders to protect your capital no matter what. I encourage you to backtest and practice before trading with real money. Support and resistance can be powerful, but you have to remain consistent in how you utilize them to truly see results. If you found this video, go ahead and like and subscribe, and if you're interested in joining the trading floor, click on the link down in the description.